Should you use your CPF to pay down your property? So recently I had a question from one of our clients who are thinking of refinancing their loan package when it is expiring next year, and whether to use their CPF in their accounts to take up a lower loan instead. So if your loan package is also expiring and you are thinking of doing the same, feel free to watch on. If we want to lower our monthly mortgage and we want to pay less in interest for our loan, it makes sense to take up a lower loan. But when CPF comes into play, it's a different story to consider altogether. So here are 3 points you should consider when deciding whether you should use your CPF to pay down your loan. So number 1, when are you going to exit the property? So let's say if you are going to exit the property in 8 to 10 years, for example, so this gives more time for the CPF accrued interest to accumulate. So if you are going to wait this amount of time before you are going to exit, you might think of how much the CPF accrued interest will be snowballing into the future. Number 2, how is the growth of your property? If the growth of your property is not catching up to your CPF accrued interest, this would only mean one thing. When you sell your property in the future, your cash proceeds will simply be eroded by the CPF accrued interest. Point number 3, is leaving the CPF in your accounts going to earn you more money than you are potentially able to save if you are going to put it into your property? So if putting the money in your CPF account is potentially going to earn you more on interest versus the amount of money that you can actually save by lowering the loan, then it is actually advisable to actually put it in your CPF account. So for our client's case, it is actually not advisable for them to use their CPF to pay down the loan because they are actually trying to receive as much cash proceeds as possible when they sell their house 5 to 6 years down the road. And their property is around 20 plus years old, and the growth of the property might not be able to catch up with the accrued interest on their CPF if they use too much CPF on the property itself. Also, the amount of interest they can earn on their CPF if they leave it in the ordinary account is very similar to the amount of interest that they can save if they use it to pay down the loan. So naturally, it is not advisable for them to do so. So what about you? If you are thinking of refinancing your loan soon and also thinking about whether you should be using CPF to pay down your loan, try using these 3 points to help you decide. If you need further assistance in deciding which is actually better for you, feel free to reach out to us. Once again, this is Nick from the Property Runway. I'll see you again.